What's going on, everybody? Liam O'Reilly, Vermont economic realtor. The Biden-Harris administration dropped the FHA mortgage insurance by 30 basis points, which is significant, especially for first-time homebuyers and a lot of people on the lower end of the income spectrum. We're going to talk about that. I think it's a step in the right direction, but it doesn't solve all of our housing issues. Also, the weekly Redfin data is home prices are up by 0.1% year over year. So basically flat, which is the first time that's happened. The first time home prices haven't grown essentially by a significant amount year over year since 2015. We're going to talk about that as well. Let's get right into it. So here is the article from the U.S. Department of Housing and Urban Development. Biden-Harris administration to save FHA homebuyers an average of $800 annually on mortgage payments, which I think is great. And so how they came with that $800 number is the average FHA borrower purchasing a one-unit single-family home with a $265,000 mortgage will save $800 this year. But the borrowers with mortgages of $467,000, the median home price as of December 2022, would save more than $1,400 a year. So over $100 a month, these FHA borrowers are saving. Now, I think this is a great step in the right direction because FHA borrowers are typically first-time home borrowers. The FHA mortgage is it says federally insured. So, right, the government is guaranteeing that, or they're at least backing the loan. So, you know, a lot of this product is designed for first-time home buyers, designed for lower income families to put a minimum of 3.5% down, which isn't much compared to, a lot of times people think when they have to purchase a home, when they go to purchase a home, that you need 20% down. But with products like this FHA product, it's not the case. So I think it's a step in the right direction. It's going to help borrowers be approved for more because they're not spending that. Instead of that $100 essentially going to the government for the insurance that they have backing this product, it's going it goes into their pre-approval and allows them to qualify for additional financing for potentially a higher amount. So if we just look at what it is here. I guess down here is a chart talking about the drop. Basically, from what I can tell, it's 30% across the board. 30 basis points, excuse me, across the board in all sections, which should save the purchaser a significant amount. Now, the reason why I say this doesn't solve all of our housing problems, I mean, it goes a long way because it's helping the people that need it most. It's helping most of the people getting an FHA product are first-time home buyers. They're people who really need housing, and that extra $800 a year on average is going to go a long way for those purchasers. I think that's a great I think that's a great thing that the administration did. The reason why it doesn't solve our housing problem is because the buy side is not the issue in housing right now. It's the demand side. We need more housing. Especially here in Vermont, I'm a little more biased in that the market that I'm in Vermont and really the whole state of Vermont doesn't have much housing in general. So we're more stressed for housing than lots of other markets in the country. But still, inventory is at half of the level it was pre-pandemic. So we're way low on inventory, and really that's where first-time home buyers and home buyers in general are going to see the biggest impact is if more inventory comes up that allows for prices to stabilize and potentially even decrease to a relatively affordable level. Another point I wanted to make is that FHA financing is strict with their guidelines. With a regular conventional loan, the appraiser goes in and they look to make sure that the home is livable and that things are up to code, that there's not that all the bedrooms have egress windows and stuff like that. But they're not looking too deeply into it. Where FHA financing will look pretty deeply into properties and will deny financing or has the ability to deny financing if there are too many issues. So things as simple as if you have a home built before 1978 and there's chipped paint on the property, that's something that would disqualify you from FHA financing. So because of that, if you're in a multiple offer situation and the seller has a choice between taking a cash offer or an FHA financing offer or a conventional financing offer, they're going to go with one of the other two. They're almost never going to go with the FHA buyer. So, and this is why I say it all comes back down to inventory, because multiple offer situations, which are still common in many markets across the country, having this added buying power with FHA financing, it doesn't necessarily mean that they're going to get the property. And in fact, it could add more competition to these homes and start driving prices up further in certain markets. So in my mind, we have an inventory issue. It's not so much an issue on the buy side. Now let's get into the Redfin housing market stats, because I wanted to talk about inventory and where it's at. It's up year over year, but it's still down significantly. And they only show it from 2020 here. But if we take a look, so 2022, record low inventory. Now in 2023 here, we're this orange line. If you look at the graph here, we're that orange line kind of on the left side of the graph. So we are well below 2020 levels and kind of the pre-pandemic normal. Of course, inventory had been declining throughout, since probably 2012 or so, had been declining for those 8 years leading up to 2020. But still, that's representative of more of a regular active listing number, is the 2020 gray line there compared to where we're at here in 2023. So inventory historically is still very, very low. 3-month supply available on the market. And then the other thing that I wanted to touch base on, this was the headline news coming out of Redfin. Median sales price up 0.1% year over year, 4-week rolling average of median sales price of homes sold. You can see just barely up year over year. And I think it's likely that we're going to start seeing year over year declines, because you look at this big peak in median home prices, with interest rates being up close to 7% now, at least over 6.5%. I don't see the median sales price getting up to where it was before, even with inventory being so tight. It's inventory is a little bit higher than it was last year, and people can afford less. So those are the two stories I wanted to bring to you today. Again, great job, I think, with the Biden administration cutting that mortgage insurance payment. That's something that they can do outside of the Federal Reserve to help people who need it most. It doesn't solve our problems, and at the end of the day, if there's not enough supply, this could increase the home values at the lower part of the income spectrum of the homes available, in that $200,000-$300,000 range. We can start seeing those prices shoot up, because all of a sudden there's more buyers who can spend more money and are willing to spend more money for housing. But really, what's going to push the needle is inventory. We need that pretty much across the country. Anyway, Lee Morale, Vermont Economic Realtor. If you're looking to buy or sell a home here in Vermont, I would be happy to help you out. All my contact information is in the description. Feel free to reach out to me directly. Let me know what you think about this video. Leave a comment. I love hearing you folks, hearing what you folks think, hearing your perspective. I learn a lot from you guys, and I really appreciate the comments. Let me know if you agree, if you disagree, what you think, and I will see you guys in the next video.